Welcome to the deep dive. Today, we're diving into a set of sources you sent over, all focused on the large cap private banks on the NSE.
Yeah, and our mission here is really to unpack what these banks are. What key numbers tell their story, look at the sector outlook around May 2025, and sort of explore what it all means for you.
Okay, so let's start there. Large cap private banks.
Sure.
We're talking the big names, right?
Yeah,
Often in the Nifty Private Bank Index.
exactly. Typically market cap over, say, 20,000 crore. Think HDFC, ICICI, Axis, KOTAK, maybe INDUSIND, Federal fall in there too. They have this reputation for stability.
And why is that? What makes them seem like anchors?
Well, a lot comes down to the numbers. The sources you shared really focus on the core financials, things like PE and PB ratios for valuation.
Price to earnings, price to book. Got
All
it.
right, then ROE for profitability, NIM, that's net interest margin for, how well their core lending business is doing.
And crucially, NPAs, non-performing assets.
Definitely. That shows asset quality.
Mm-hmm.
And CIR, capital adequacy ratio, which shows their financial strength, their cushion. These are the key metrics.
Okay, your sources gave some snapshots, mainly November 2024 to May 2025. HDFC Bank First the Giant, market cap around 14.7 lakh crore, but that PE ratio, it jumped out, near 20.
Yeah, it's high, way above the sector average, which the sources put around 9. It tells you the market assigns a big premium there.
And the sources link that premium to strong profits, like nearly 18.8K crore net profit Q4 FY25, and really low NPAs.
Exactly. Very low MPAs, 1.2% gross, just 0.3% net, plus a strong CAR, maybe 19-20%.
Yeah.
Analysts seem on board too. Lots of buy ratings mentioned.
Now, let's contrast that with Axis Bank.
Hmm.
The sources seem to single it out later. Smaller, yes, market cap maybe 3.54 lakh crore, but it's PE. That looks quite different.
It does. Around 13-15, according to the data provided. That's much closer to the sector average,
Yeah.
suggesting, maybe better relative value.
And the fundamentals hold up, ROE, NPA, CR.
Seems so. ROE cited around 16-18%. NPAs also very low, 1.5% gross, 0.3% net, and solid CCR, 16-17%. The sources mention its momentum and customer focus as well.
So a potential balance there. What about ICICI, another big one? Market cap around 9 lakh crore. PE a bit high too, over 18.
Yeah, slightly above average PE. Historically strong profits, good ROE, healthy assets, decent CR. It's a solid performer, known for innovation, but maybe not the same value angle highlighted for Axis in these sources.
Okay. And KOTAK, similar size to Axis, but its PE looks more like HDFC's, around 2022.
That's what the sources indicate. Excellent asset quality, high CR. But yeah, that valuation is up there. ROE mentioned is slightly lower than some others too, maybe 13-15%. Strong bank, but the price reflects it.
And briefly, Banhan Bank, sort of borderline large cap. These sources sounded less positive there.
Yeah, definitely paints a more challenging picture. Lower Q4 profit, rising gross NP as mentioned. CR improved, but profitability seems to be a concern. Less attractive based on the snapshot.
All right, let's shift to the bigger picture. The sector outlook as of May 2025. What are the main drivers mentioned?
Well, digital transformation is huge, obviously, and underlying credit growth in India. But there's a counterweight. The RBI's caution, higher interest rates, putting pressure on margins.
Although strong NIMs help some banks navigate that, right?
Correct. And it's interesting, sentiment in 2025 seemed to favor these large caps. That flight to quality, perhaps, as mid and small caps face more pressure.
But challenges remain. NPAs creeping up in some places. Global uncertainty.
Yes, those are the headwinds mentioned. But the overall long-term view for banks with solid fundamentals, low NPAs, high CRR still seems positive according to these sources.
So if you're looking at this sector, what's the takeaway?
The pros are that stability, the growth potential linked to the economy, maybe some attractive valuations like we saw with Axis, and analyst optimism.
Cons being the interest rate pressure, those specific asset quality risks, and global factors.
Right, so the advice seems to be, yes, potentially good for long-term investors, but you really need to be selective. Look at the fundamentals, and maybe wait for dips.
And the analysis you walked through, based on these metrics, points specifically towards Axis Bank.
That's the conclusion drawn from comparing the data in your sources, yes.
Because of that balance. Valuation versus fundamental health.
Exactly. The more attractive PE compared to, say, HDFC or KOTAK, combined with strong ROE, low MPAs, good CRR, and that positive momentum mentioned, it's presented as a potentially better risk-reward within this group.
Understood. And the sources also mentioned thinking long-term, diversifying, keeping an eye on results and RBI moves, and maybe buying on dips. Standard good advice.
Pretty much practical considerations alongside the analysis.
Okay, so boiling it down for you. This deep dive suggests the large-cap private banking sector offers stability and growth, especially long-term. The analysis zeroes in on Axis Bank for its blend of value and strong fundamentals while explaining the premium for HDFC or the specific issues facing Bandan.
And here's something interesting to think about. Looking at that sector outlook, the digital push, credit growth, but also the regulatory caution, it really makes you wonder, how might this shift to digital and evolving regulations actually change what we mean by strong fundamentals for these banks over the next few years?
That's definitely food for thought. Thanks for joining us for this deep dive. We hope this gives you a clearer picture of the landscape.